Let's talk about Meta. They reported their fourth quarter earnings yesterday, and it was one of the worst reports ever to date for Mark Zuckerberg and co. This was the company's first earnings report since the name change, and also a shift towards the metaverse that they had back in October. So let's bring in Rebecca Walser, president of Walser Wealth Management. Rebecca, good morning. Good to have you here. So some pretty shocking numbers here from Meta. What was your big takeaway here? Rebecca, do you have us on mute by chance?
Sorry, I don't know how that happened.
No, that's okay. That's okay. Go right ahead. Try again.
Live TV. This is the first. This was shocking. I mean, let's call it a shock, because we were not expecting to see this many users lost for the first time really in Facebook Meta's history, and its 18-year history. So that's why I think the market really reacted severely. It's actually down 22% in pre-trading numbers, from 323 down to 251. And if that holds, the stock will lose basically $200 billion of market capitalization. Mark Zuckerberg himself, $1.93 billion from his personal earnings. And so if we look at the reasons that Zuckerberg gave yesterday on the earnings call, he said basically it's TikTok. He feels that users are moving more towards the short version of videos, and TikTok has that market squarely in its crosshairs. And so that's the issue. And the other thing that we saw, besides just declining daily users for the first time ever, was the fact that they've spent a lot on this metaverse vision that Zuckerberg has, where he feels like instead of logging into Facebook, you will log into a universe and you will have this universe. I mean, that they've spent a substantial amount of revenue on this over the last 3 quarters. And, so that is increasing expenses while decreasing revenues. They really lost, if you dissect the numbers, they really lost ad revenue on the short form videos. And so Zuckerberg did say that on Instagram, they're really focused on their short reels videos, and that's what they're trying to do to sort of combat this TikTok revolution. But, there's a lot of things going on with Meta, and it is a concern, absolutely a concern for investors.
And as our viewers see, the stock down over 20% this morning pre-market as well. So it doesn't look like it's going to be a good day for Meta afterwards. Let's talk about the Reels part, because I think it's so interesting, because they clearly make way more money from the news feed than they do sort of the monetizable targeted ads on Reels. But that's where all the eyeballs are right now. Is that going to be a concern for Facebook, as you mentioned, because they're investing so much in the metaverse and not so much on these Reels?
I think that's exactly the point. And I think this is a wake-up call for Meta/Facebook. I mean, they have this vision of us going to a virtual reality world where we're sort of engrossed in, not living in the real world, but going into their meta universe and all the things that they're trying to plan for you to do there. And it's a big ask, right? It's a big thing to do. So it's going to take a long time to develop, and it's going to take a long time to bring to fruition. In the meantime, the world is moving on. We have a very short attention span, especially on social media. And we want the short little videos, and TikTok has just taken off. They might have some help with the U.S. government and censorship on TikTok, because we're reading more on the regulation side that the app itself could become a problem for America. I know Donald Trump during his administration tried to do some stuff with TikTok that this administration didn't really do, but now we're seeing how it is affecting Meta. And so not that we want censorship or monetization of platforms to make the other business successful, but what Zuckerberg's vision is a long-term vision. It's going to take a lot of time for people to switch over into going into and experiencing a metaverse versus just watching short-term videos on TikTok and Instagram. So I do agree with you that they need a stopgap until they get the world hooked inside the metaverse. They need a stopgap to keep the people coming back every single day.
Rebecca, why did we see other tech stocks fall significantly because of this earnings report? I mean, Snap is down 14.5% pre-market. Twitter is down nearly 7% pre-market. If these are competitors to Meta, why are they being impacted by Meta's report here?
It's a class of, that's everybody in the same tech class. Is everything in America, are our tech giants aging? Are there new competitors that are coming out that are going to really give them a run for their money? This was a shock. This was a surprise. I don't think Facebook did a good job, Meta did a good job of preparing investors for the declining revenues and the loss of the daily users, which is what obviously a Facebook platform and a Twitter platform and a Snapchat platform are all about. It's the recurring eyeballs on the application. And as those start to go, what you're starting to see is potentially a foretelling of all different legacy platforms, let's call them, even though they're still relatively new, last 10 years, legacy platforms losing eyeballs to new competitors that are coming up. We have this Donald Trump Truth Social that's launching sometime in February, March. Who knows what that's going to do, if that's going to be a success or failure, but there is new competition coming in, and I don't think big tech can take for granted the fact that they have a legacy user base that will continue to stay with them, because people aren't loyal, as we're seeing, and I think that's what it is. They're realizing, hey, people aren't loyal just because they have been for a long, long time.
Facebook also, Meta, I have to get used to this. This is going to be very difficult. Yes, this is going to be very difficult for me to do. So that's my challenge here. Yes. Meta, this is also their first report where they've taken the Reality Labs section and basically made it its own section within their earnings report. And it made about $877 million in revenue, but it had an operating loss of $3.3 billion. But as we've said, Metaverse is really the focus here, the hardware, all of that. Are we expecting more losses in this area for them for a while, at least until more people are part of the metaverse?
I absolutely expect it now. And we knew that this was going to be a very big infrastructure expense, research and development, whatever you want to call it. It is to get their Reality Labs, which is Zuckerberg's vision of you don't log in, but you enter a universe. Reality Labs is sort of the tool through which they are doing this. And it is expensive to develop this. It is a lot of bandwidth. It is a lot of capital as far as development, and to make people feel like they're entering into a world and they're not just logging into a website and looking at, the dailies of everyone else's lives. So yeah, this is something that is going to be a long-term stretch for Meta to get people to come over to this new universe, and it's going to be a lot of expense up front. That's what we've been seeing. Not a lot of revenue, a ton of expense. And until it really becomes a mainstream tool that a lot of people are using, we're just not going to see it profitable for, I would expect it for the long haul. I mean, 24 to 36 months at least is my prediction. And we'll see. It has to catch on, right? We don't even know if it's going to be a success. The whole thing is people have to start to like going into the meta universe, and that is not where we are right now as a world. So that has to be also a sea change of people's time spent. It has to be on not short videos, but entering a new virtual reality sort of, I don't know how to even describe it to people, experience that you want to stay in and not look at short-term videos, really short videos.
You sound like the challenge I have when I talk to my parents about the metaverse all the time, so I totally get it. Rebecca Walser, always good to have you here. Walser, president over at Walser Wealth Management, joining us this morning.